Welcome dear students and scholars. We continue our ASC 260 earnings per share series with the numerator of Basic EPS. In the previous video, we built the full EPS framework. Now we slow down and control only one part of the formula, income available to common shareholders. Before counting even one share, we must answer a simple but important question. How much of reported income actually belongs to common shareholders after preferred shareholder claims are respected? Here is the path for this lesson. We begin with the reported income line, then deduct the appropriate preferred shareholder claim, then connect the result to the correct EPS presentation line, and finally solve a focused example. Notice what we are not doing today. We are not calculating weighted average shares. That belongs to the next video. Good EPS work is like good kitchen work. Do not mix all ingredients before checking the recipe. The basic EPS formula has two parts, but today we own only the top half. The numerator is income available to common shareholders. That usually starts with net income or income from continuing operations when we are computing that required EPS line, and then subtracts preferred dividend claims. The denominator, weighted average common shares outstanding, comes later. Keeping these two parts separate will save you from many exam mistakes. Every numerator starts from reported performance. Sometimes the question asks for EPS from continuing operations. So the starting point is income from continuing operations. Sometimes it asks for EPS on net income. So the starting point is net income. In both cases, the same discipline applies. Identify the correct income line first, then remove the preferred claim before assigning the remaining income to common shareholders. Common shareholders have a residual claim. That means they get what remains after higher priority claims are handled. Preferred shareholders, by design, usually stand ahead of common shareholders for dividends. So for basic EPS, we do not simply take net income and divide by common shares. We first ask whether preferred dividends have taken part of that income pool away from common shareholders. The preferred dividend deduction is direct. Income available to common shareholders equals net income minus preferred dividends, or continuing operations income minus preferred dividends when computing EPS from continuing operations. Common dividends are not deducted because they are distributions to common shareholders, not claims ahead of them. EPS measures earnings available to common shareholders, not only earnings actually distributed to them. When preferred dividends are declared during the current period, the declared amount normally reduces the numerator. The board declaration creates the preferred shareholder claim, and that amount is no longer available to common shareholders. For non-cumulative preferred stock, this declaration step is especially important because no declaration normally means no current preferred dividend claim. Cumulative preferred stock is tested heavily because it breaks the simple declaration habit. For cumulative preferred stock, the current period preferred dividend is deducted from the EPS numerator even if it has not been declared. The preferred shareholders accumulate that claim. But be careful, prior period arrears are not deducted again in the current period because those prior period claims belong to prior period EPS calculations. Non-cumulative preferred stock works differently. If the board declares the dividend, deduct the declared amount. If the board does not declare it, the missed dividend does not accumulate and it does not reduce the EPS numerator. This is the clean contrast. Cumulative preferred means deduct the current period amount even if undeclared. Non-cumulative preferred means deduct only what was declared. This decision gate is one of the most useful tools in basic EPS. First ask, is the preferred stock cumulative? If yes, deduct the current period preferred dividend whether or not it was declared. If no, deduct only the dividend declared during the period. Do this decision before arithmetic. Many students lose marks not because the math is hard, but because they choose the wrong gate before starting the math. EPS from continuing operations uses income from continuing operations as the starting point. Then we subtract the applicable preferred dividend claim to arrive at income from continuing operations available to common shareholders. This line is important because it focuses on the entity's ongoing business performance, separate from discontinued operations or other components below continuing operations. EPS on net income uses total net income as the starting point. Net income includes the full period result, including continuing operations and any discontinued operations. The preferred dividend deduction rule does not change just because the income line changes. Deduct the applicable preferred claim, then the result becomes income available to common shareholders for net income EPS. When discontinued operations exist, the EPS presentation becomes more detailed. EPS from continuing operations is required on the face of the income statement. Per share amounts for discontinued operations may be shown on the face or in the notes. The preferred dividend claim is generally deducted in arriving at income from continuing operations available to common shareholders. So do not deduct the same preferred dividend again from the discontinued operations line. The goal is clean presentation, not double counting. Now read the example facts carefully. Net income is $500,000 and preferred dividends declared are $40,000. The common share count is deliberately logged aside because this lesson is only about the numerator. Your task is not to compute final basic EPS yet. Your task is to find the correct income amount that belongs in the top half of the formula. The calculation is straightforward once the claim is identified. Start with net income of $500,000. Subtract preferred dividends declared of $40,000. Income available to common shareholders is $460,000. That amount is the numerator. The preferred shareholders received their priority claim and common shareholders receive the residual earnings pool. Now take a moment to apply the cumulative preferred rule. Net income is $300,000. The annual dividend on cumulative preferred stock is $30,000. The dividend was not declared. The key question is whether the current period cumulative preferred dividend still reduces the numerator. Think through the decision gate before moving to the answer. The correct numerator is $270,000. We start with net income of $300,000 and subtract the $30,000 current period cumulative preferred dividend. The trap is writing $300,000 simply because the dividend was not declared. That declaration logic applies to non-cumulative preferred stock, not cumulative preferred stock. That completes the numerator lesson. You now know how to start with the correct income line, identify preferred dividend claims, distinguish cumulative from non-cumulative preferred stock, and arrive at income available to common shareholders. In the next video, we move to the denominator, weighted average common shares outstanding. If this helped you, please like the video, share it with your colleagues, subscribe to Commerce Regiment, and support the channel so we can keep building this US GAAP course with clarity and exam value.